Hello, everybody. Thanks for joining us for another episode of Arthur's Roundtable. Super grateful to the Family Office Insights community for participating in these and sharing with others who are just getting started, as you know, with this podcast. And we're just super grateful again for everybody participating. And we're happy to welcome Alicia Castillo. Did I pronounce it? Castillo Holley. I just see that now, right? For joining us today. She's just fresh off or in the middle of the JP Morgan Healthcare Conference out in San Francisco. And so maybe we'll enjoy some of the insights from that as well. So, Alicia, please, thank you for doing this and welcome to the podcast.
Thank you for inviting me. It's such a pleasure to be here and so grateful to be able to be here, especially after the JP Morgan
Yeah,
and before
right.
Davos. Well, I'm recovering between.
Yeah. So let's start a little bit with how your journey began. That's okay.
Sure. I have a very unusual journey, which is now become very popular because I grew up in Venezuela, in a little town. And actually, I'm from Aragua state, where the Tren de Aragua was formed. But I left Venezuela more than 40 years ago. My parents are not Venezuelans. They left their home countries because of wars. Their parents left their home countries because of wars. And then I migrated, and then my kids continue to migrate. So we're a family with a lot of wings and not a lot of roots, or roots come everywhere. I began my professional career as a scientist. My parents are both socialists, the romantic type that we forgot, the ones in the 60s that you have to share knowledge. They're both educators. So it's you create knowledge, you share knowledge, education is the future. Money doesn't matter. So that gives me a very unique lens to be an investor, which is why I'm now. Went from science, went to work for a corporation through the hands of one of my students. Then I discovered entrepreneurship late in life. I went to Boston, and that opened a world for me. I realized we don't have to pick who wins and who loses. We just have to make the pie larger. And I became an entrepreneur. And then so many people invested in that. And me, and I discovered venture capital. I'm in love with venture capital. I know how it works. I made my money in venture capital. And it doesn't work right now. And then later in life, I moved many countries. I moved myself to Silicon Valley in 2012. Joined St. Angels, now I have an investment club, and now I have a fund and family office. And I'm very interested in using venture capital for progress and making it work for family offices, founders, consumers, and society at large.
Super interesting. So, what was the first entrepreneurial endeavor look like for you?
So it's very interesting. My first entrepreneurial endeavor was when I was in college. So I was in college. My parents didn't think you have to give your kids allowances. You go figure it out. So I was a research assistant since I was 12. I presented my first research paper at 15, and I didn't get paid. It was all the prestige. And I figured out, well, I need money. I walk 40 minutes to get to the lab. It would be good to be able, I'm not even thinking about a car or a bike. It would be able to pay for the bus. So that's how I started thinking, hey, we do need money. It's not, the world doesn't work without money. It's good to go and pick up your potatoes, but you do need that. So my first entrepreneurial venture was making a cake out of 7-Up, which never went bad. And I would sell the pieces to the professors. And because I didn't have the money, I would pre-sell it for the next week. And with
Take an
that,
order. Nice.
yes, I had no clue what I was doing. I didn't know anything about finance. We never talk about assets and liabilities until, I learned that word when I was in my 30s. And people forget there are worlds, there are societies that live and exist and are healthy and are happy, and they don't need to follow the liabilities and all of that. And they exist. So that was my first one. And even I was a professor at the university, and our salaries were not big. So I had to figure. I ended up buying a car that was 16 years old. I know how to fix cars, but at some point I said there has to be a better way. I was not suffering because everybody was the same. It's a little town, but it was frustrating. It's like, how come I can't have this? So I always think, money is an illusion. That's one of my things. We don't need money. We need things, and we just money to pay for it. That opens up a wide range of opportunities in entrepreneurship, but also in venture capital. Because I always ask, my key question for founders is, if you need something, if I can give you something and it's not money, what do you need from me? And if the answer is money, that's not even investor for me. That's not even founder for me. They answer, this is what I need. And then we work together to see how you reduce the needs of funding so you can increase your multiple. And that's how I make my money. Not vanity investment, but how do we really make money on our investment? And part of it is capital, but part of it is a whole bunch of other things.
So give us a couple of examples of how somebody's answered that question that caused you to say, okay, I'll give you the money and that.
Okay. So I have two examples that are really, really interesting. And in the first example, we made 50 times our investment in 13 months. So that example was very close to me because there were two scientists and I was a scientist, and they print organs. And because I'm a scientist, I work in science, in genetic expressions, I dismissed the companies. They can't do that. And they kept bugging me. And then one day I said, I'm going to go to the lab. And I saw what they were doing and I was blown away. And so I look at the number. I have a PhD in finance that I got later. So I looked at the numbers and said the reason why you can't raise funds is that your valuation is too high. So you've been raising funds for a year. You've gotten to half of it. I dismissed you because I didn't believe in the technology. So I'm going to bring you, I was a lead investor in that second round. I'm going to bring you, but let's do something. Drop your cap. It was a convertible note. Drop your cap from 12 million to 8 million and call everybody and say, we're going to close this round in 2 weeks and close it. Because you can't be racing around for a year. You've been advanced. It doesn't work. So they did that. They closed them out.
Everybody else agreed because they got the balance of the money to stay in business, right?
But no, they were investors that have passed, but had an interest.
Oh, I see. So they hadn't invested, but if they dropped the valuation, then they're going to write a check. I got it.
Yeah.
Okay.
But it goes back to values and principles. On their own, these two founders went back to all the investors that had invested at a 12 million cap. And they said, hey, we have better deals, better terms. And we think it's just fair that everybody comes on the same terms because you help us at the beginning. So that made me feel very good about them.
Yeah, that's a good signal.
Yeah. Within 3 months, they raised another million at 12 million. But this is what happened. I used to work for pharma in product development. And when I look at that, I said, you're trying to solve a problem that is way up there. It's going to take you 20 years to solve that problem. They started with lung, and the use of the smoke use has declined. So lung cancer is in decline. Throat cancer is going up because we do vaping, and pancreatic cancer is up. And so I said, you're missing the point because you're building towards a market that is decreasing. So you need to change that. But the most important thing that I told them was, your market is not the patients. Your market is pharma, because the people that are developing the molecules for the future need to test it in cells and in organs. Nobody can test it in organs. So the way we test it is, if we put an organ in a mice and we train the mice, but we're not mice. We're mouse, but we're not. So it doesn't work. So I said, if we can test, I'm so passionate about this because it's my two passions, science and investment. And I said, if you can provide the research department of a pharma company with a way of testing this in tissue before you continue doing the formulation, you just unleash a ton of value, because it's not that you reduce the time, but researchers are expensive. We spend millions of dollars and billions of dollars researching something. And then if you can reduce that 1 year, you just save a ton of working capital. So they didn't know how to do it. This is a company that the printer, the paper was human tissue, and the ink was your DNA, my DNA. So it was personal. before people were talking about personalized medicine. But, and I'm going to explain this because it's the way I think. And I think this is what we need to add in venture capital. This is the missing piece. So they say, how do we sell that? And I say, well, nobody knows because you're doing something that is very unique. But I do know that the price has nothing to do with the cost. The price has a lot to do with the value. So we're going to price it very, very high. You're going to the same printers. We're going to price it very, very high. And if it's too expensive, they will tell you. But if it's not too expensive, they won't tell you. They'll just buy it. So we price the printers for labs. They were pricing at 30,000. We price it at $500,000. It just to test. We
Yeah.
got it ordered
See,
for 10.
yeah.
So now the company doesn't need $5 million to raise. Now the value of the company increases. It risks of the
Give less
company,
of the equity away for, right.
and
The
that's the way
founders
we
get
work.
more equity. Yeah.
We have more equity for the founders. We have more equity for us. So our multiple is higher. So I don't do vanity investment, the billions of dollars, because we have 4 unicorns in our portfolio. We have 1 unicorn now in public. Once you reach that, you're not going to make a big multiple. You make some money, but it's more bragging rights. Oh, I'm so big. And, when you're so big, you can't really grow that much. So our focus is very different. How do we reduce the risk? How do we reduce the need of capital, and how we can add value? So that company was sold 13 months later for $400 million.
Wow.
Creates a ton of value because researchers need that.
So they were able to demonstrate to pharma that they could test something on human tissue.
No.
And
No, they sold the printers and the papers and the ink to pharma. They just sold it. They just sold the printer. They sold it for $2 million each printer, and they would create what pharma needed. So pharma could test it, because that's the other thing. When you're testing a product, that's confidential. You don't want people to know that you're testing it. Yeah, and you need to test and you need to improve it. So there's a lot of love and hate relationship with pharma. I work for Bayer and I work for Ciba-Geigy, and I have a lot of admiration for them. I live better because pharma exists. It has a lot of side effects, but the reality is that if pharma didn't exist, if we had not been investing in pharma, most of us would be dead. That's a reality. So we need to continue progressing science. Science only progresses when we're skeptical. But so that's the other thing. Have continue adding value. So that's what they did. They provided a mechanism for pharma so they can test it. And the beauty of this particular technology is that nobody loses. We need more pharma using it. So it was just a virtuous circle, and everybody benefits. So we evaluate something that we call the multiplier effect. So instead of using an impact, we look at who else benefits. And we tend to invest in companies that create a massive amount of wealth, not only for us, but for society.
so in the case, you don't have to say who it was unless you want to, but who was the natural exit for them? So what was the profile of the company that was willing to pay? Was it a pharmaceutical company that paid $400 million exit? That's what I'm interested.
It was a company that was doing printing for materials, and they wanted to go into biologics.
Yeah, perfect.
Completely different. Synergy over synergy over synergy over synergy.
Yeah,
Would have been an ideal acquirer, but it was not HP.
yeah, right.
So an idea in life sciences, in many of our companies, I prefer acquisitions, strategic acquisitions, than IPOs myself. But when you think about the market, when you only have the economics macro view, you try to feel who has the capacity to increase manufacturing for this particular product and who has the commercial venue. And we're talking to family offices. That is the biggest tragedy in venture capital. So in venture capital, I'm an investor in 13 VCs. And I have a ton of non-financial contributions that I can make. But I don't know makeup. That's not my area. That's science. I know a lot about engineering. I know a lot about space. I know a lot about energy. So in those areas, it is just simply stupid for me to just give them a check. And that is the big tragedy of venture capital now. And that's what I want to change, because family offices have the infrastructure to manufacture or to deliver or to package or to sell. And they try to get into venture capital without understanding venture capital, which is very, very unique. And the way they go through venture capital is blinded. Like we invest in the stock market. In the stock market, we pick winners. The way venture capital works is making winners, co-creating that. And what is good for you might not be good for Anne or Peter or Ahmed. I don't know. You need to find that edge. You need to find how to co-create that wealth. And that is what is missing. And that's what I want to be working on.
So would you agree that the typical venture capital operating model is flush 90% of the companies, give them a lot of money until they fail and demonstrate that they're not unicorns, and then super fund the 5% that are likely, and that the trouble has been that many of the companies that they kept on pouring capital into didn't have a path to success. They only thought that cash would solve the problem. So I'm sorry to be so convoluted.
Yeah, no, there are many questions to that. And again, it is useful to me to get back to my roots to understand that money is an illusion. Okay. So it's not money. It's what do we need? Do we need an expertise in this? Do we need, so for example, we don't need a consultant to be working with us 10 hours a day, but we have a way to measure that. We need a consultant to tell us stop doing that so we don't waste a year in working
Right.
capital. And so that is the concept. I think people have the best intentions. Venture capital was actually formed in Boston to overcome the problem of lack of jobs. That's what it was. So there was a banker, professor from MIT, professor from Harvard. And they went through the richest families and they said, we want $1 million and we want to create new jobs. And we don't know how we're going to do that. And we're going to take 30%, but we're not going to put any money. And they convinced 7 families, and that's how they started. And the first investment was debt. And that became a super unicorn. We didn't call it unicorn at that time. But now everybody started doing that because they think it's easier. So what happens with venture capital is that there's a lot of misunderstanding. 65% of VCs are not going to return the money that they receive. 65%. I know because I'm an investor in some of them. And I know people planning that stupid thing.
Me too.
And I have an investment club. We're in the top 8%. We still lose money, but we make more money than we lose money. And then now what happens is a lot of people are thinking, oh, the problem is that you don't have liquidity. Well, you don't have liquidity, sell internally. But it's all a bluff. So I wrote an article on LinkedIn about what I call the circularity of capital, which is a new financial concept. So if I have, especially in AI, if I have an AI company that needs to get money, so some of the big companies that would benefit from that would invest in that, the corporate VCs, that they would put $1 billion, but I put $1 billion, but you sign a contract that you will buy $5 billion or $10 billion in marketing from me. Or I put $1 billion, but I am your supplier, and then you buy $10 billion chips from me, or I bet. So what has happened in AI is that for individual investors, there's no money to be made because the money was made on the transactions. And people need to step up, especially the people that operated businesses, that I understand the business. People need to step up and say, okay, how does this work? And then the second layer is you make money in venture capital with the equity part. So you need to figure out who benefits from what you have, because it's completely different. There's a synergy that has not been discovered. And that is also missing. But as long as we keep the limited partners limited, we won't be able to make that connection. So like right now I have a club and I have a fund, but I merge them because the club is more efficient and I like that model better. It's not for everyone, but it's much more efficient. You don't need, think about it. If you make 50 times your investment and you put $1 million, you just make $50 million. But also you help everybody. So the patients have better systems. The healthcare system doesn't waste time, but nobody lost in that transaction. And we need our family emphasis to get together and say, how can we add our piece of the puzzle? So whatever it is that we have with whatever it is that they need can come together and they don't have to spend the money, for example, to build a clean lab, or they're going to have to spend 1 or 2 years to find a consultant that can open doors for them. We have that. We just added. Procter & Gamble had a system called Open Innovations in 2012. I don't know if they still have it. And what they said is that if you have a new idea or product, we'll help you define it. We'll help you sell it. We'll help you produce it. We'll help you distribute it. And we'll take a portion. And I remember I talked to another founder, and direct to consumer is just not my area, but I remember talking to some founders and said, we don't want to give up equity. And I'm like, that's so stupid. You're giving up equity and then you have to work overtime and you don't know what you do. Just pair with them. That's a good thing. So I think that's good. And then corporate VCs have their own challenges because it's very political and you can't
Bureaucratic. Yeah. Yeah.
Yeah, I mean, I went to I'm not going to name the company, but because my area is life sciences and energy, one of them wanted to get into that area and said, could you please advise us? And all the incentives were aligned to investing. And I said, you have the incentives wrong because if I save you from wasting $10 million, that is good for you. But there's no way that I can benefit from that. And you can benefit from that. So the people that you're attracting are the people that without knowing are more inclined to continue investing and to say, oh, we invested this billion, this billion. So we need to be aware of vanity investment, in my opinion.
So can you help us understand the difference? The fund structure is pretty clear. How does the club differ? Is it like Angel List syndication club?
No. And I have a little bit of trouble explaining that because people are so used to the models. So I spent probably 7 years creating a model because that's what I do. And it's like, oh, I don't like it. Let me see if I can fix it. And by the way, I'm working on a model of philanthropy for profit. So anybody wants to come and join, get crazy ideas. I haven't figured it out. But so I tell you what we did with the club. So I've been investing for a long time. I had a good track record. A lot of my friends wanted to invest with me. I don't like SPVs. I'm a people's person. I want to see who you are. Do you have kids? Do you like horses? Because at the end of the day, we're all people, and that's what's important for me. Money comes and goes, people stay. So after a certain period of time, I was at Sand Hill, which is a great group. I was on the board. I was a co-chair of life sciences. It was overwhelming. So I said, I am going to pick one company of all the companies that I see. I'm going to pick one company per month. And I will do a due diligence and I'll show you how you do that. And you can come and invest with me. And if you don't want, you don't have to. So I created a club, and that's what the club does. So the club is a membership-based organization, and every investment is a class. That's very typical in California, but it doesn't exist in other states. So other states have what is called Series LLC. California doesn't recognize Series LLC. Maybe it will in the future, but it doesn't. But it recognizes classes. So every investment that we make is a class. And then the members can choose how much they want to put, if they want to invest, if they don't want to invest. I don't care. I'm going to invest in all of that. So essentially, I did it for myself. It's going well. And now I have a little family office with my 2 kids. We do that for ourselves. And then the members can come. And if they want to invest, they can invest. And if they don't want to. And the way we have, if we separate that into what needs to be paid. So the membership of the club provides information for people that want to explore investing. We have one new company per month. We review between 50 and 100 and up to 2 follow-ons. So for example, we have 2 follow-ons this month, and one of them is open to everyone, but the other one is an insider round. So the companies that they continue to grow, they can usually have insiders rounds only because it's only for the people that invested before. But so we have a club that provides information. If people want to, and then that's a cost because that team has to be paid. And if people want to come and join, then we have an investment vehicle, one investment vehicle for the whole club. And every member has a participation in that particular class. And then that gets paid to 20, but we return the 2%. So, but that team is the team that follows up and calls, and we help the founders collect. We help them even if we don't invest, because probably 20% of the companies that we invest in are companies we declined 2 or 3 years before. And we help them say, take a look at these. Go and talk to this person. I have a network of VCs that are super cool, and angel investors and family offices. But if they want to invest with us, legally they have to. What happens is now without knowing, but I didn't know that. What happens is any member can buy or sell from any other member. So we have our own secondaries that are completely transparent. And you know what? I really want more people to use this model, even if they work with me or not, because this is the future of venture capital. VCs don't work. You have to live in 10 years. It's a lot of stress. The GP is like a sandwich. Yeah, so you have to provide this information for them. You don't have the time to really support. You're on the board, but the board is, we don't take board position. Board is controlling. We're more in, hey, let's help. If you're on the board, you have to fire your whole team, or you have to fire the CFO. You can't talk
Yeah.
to the CEO. You have to replace the CEO. You can't.
So is it fair to compare the class structure for the club as if it's an SPV that is often used, where I'm an LP in the SPV and that I can sell my LP interest to another LP in the SPV? Is that a fair comparison? Like if I wanted liquidity as a secondary, for example.
That is a fair comparison as long as somebody else wants to buy it.
Right. And in your case, it's the
And
same?
you have to be a member of it.
Right. There still has to
You
be a
have to
willing
be a
buyer,
member of
willing
the
seller.
club.
Right. And the
Yeah,
club
the
is,
information.
go ahead, it's a little delayed. My fault. Go ahead.
No, no. So you have to be a member. Otherwise, legally we can't do it. You have to be a member of the club to be able to transact. But like last year, we have accredited investors. We have family office. Last year we had a family office. It's a friend of mine that I've known for years. He kept saying, I need to organize my state. I'll go and invest. I don't really mind. These are great companies. They're going to get funded. We don't do pre-seed. And we're just grateful to be able to do this. And eventually he said, I'm ready to join. And I'm like, you always say that. No, 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 I am. But he said, and it was really funny because I said, we need to know your customers. So there's steps that we need to take because we don't want toxic people in the club. So not everybody comes to join. But
Yeah.
the funny
Life is
thing is
too
that
short.
yeah, it's becoming shorter on my and so yeah, and so he's joined on a Tuesday, and somebody said, "I want to buy these companies," and I'm like, "What?" He said, "Yes, yes, yes." So our information is on the web. Actually, we just published our last year's results, and it's all on the web. So you know who we invested. We have an active LinkedIn page, and the top 4 or 5 we put it on LinkedIn, even though we only pick one because these are great companies. More people should know about them. But we don't provide investor advice. We provide information on the club. People make their own decision. But what happened was that this guy joined and he said, I want to buy this. And this is how much I want to pay. And I said, you don't even know how much there was. I said, no, I don't have to. This is what I want. So we put it on, we sent it to our membership. By Wednesday, he didn't buy the fourth one, which is going to become a unicorn. But by Wednesday, he joined on Tuesday. By Wednesday, he had 3 investments. And I'm like, wow. And then our members are happy because they could sell 5%, 10%. We just had a conversation earlier, and one of our members said, I tried this product. I want to buy it. I know she's a member. She said it's Madison Reed, which is a super cool. We have two consumer products only. And she said, I saw who wants to sell. So I was talking to another member today, and I said, "Oh, this person wants to sell." I said, "Oh, I want to sell half of it." So it's just more convenient. It's the way I think investment clubs should work instead of saying, "I'm going to take some from you," and it's also nicer. It's more fun.
So to be a member of the club, you obviously have to know the person, has to be a good fit, no toxic people. Do you make a commitment of how much money you're likely to put into something? You pay a fee. What is it? How's that work?
So that this is going to be a podcast about my life. So I'm like, oh my gosh. So
We could talk about whatever you want.
no, I just say it's, I blush because I'm so passionate about the function of the club and I want more people to do that instead of doing the VC. But um, the way we have it is to be a member of the club, you pay an annual fee. That allows us to do all the work that we need to do without having to put pressure on the team or the company or the club to make investments. So there are two different decisions.
Non-conflicted. Yeah.
Not conflicted. So we, at the moment, this year, it's $5,000 for accredited investors, $25,000 family offices. Family offices have two extra services than accredited investors. You have to be an accredited investor, and you have to talk to us, and we interview you, and then we see if it's a good fit for you as well. Because venture capital is risky, so people need to know that if you don't have money to lose, you shouldn't do venture capital. But I have some educational webinars. So, it's around 5%, 2 to 5% of your asset base should be invested in risky things that founders or VCs or direct investment. But the thing is that if you invest blindly, you're not going to get results because that works in the stock market. But these people need help and you need to help them. So only invest in things that you can help. So that takes care of that part. If people want to invest, we charge 2% annually from January to November. We don't charge December but we charge it annually, and that takes care of the post-investment team, but also the team that's at the financial and the CFO and all of that. So that's how we separate them. So the people that invest should pay for the follow-up. And in most of the angel groups in the crowdfunding, which are good platforms, you don't have the follow-up. And you don't have the capacity to interact with the founder. So that is the problem. So that's the way we have structured that. We try to limit membership month is January, and the rest of the year we focus on supporting our companies. We make money supporting companies. We don't make money on fees. SPVs, you never know how much money is going in. And I've done a couple of webinars about that. And, I keep thinking, how can we continue to improve? But the way we did it is we have one deal, only one per month, and that we present. We do a deep due diligence, 59 variables, make it in chunks that are manageable. We have a newsletter I travel all the time. So I have a very global perspective of the financial markets. And by analyzing the companies that they come, we can see we have something that we call the Pulse of VC. So we have a newsletter that allows our investors, our members, to have an overview of where the market is going, what are the forces of finance. For example, life science is very important for all of us. Not a lot of money is going there. Where is the money going? The money is going to the support infrastructure for AI, which is energy, transportation, some computing, space, mobility. So we need to understand that because now we need to be more patient with that. And then we have one deal a month and we do a due diligence. We put it on the portal. We spend 3 or 4 months reviewing that. We only transfer the funds when the round is 80% full. So that's the way in general we work. And we have one meeting a month only. That is 1 hour. So it's 40 minutes with the founders or the CEOs. Sometimes the CEOs are not founders. And then 20 minutes amongst ourselves where we talk about everything I have a joke. When somebody joins and says, I have a stupid question, I say, there's no stupid question for stupid people. So now nobody says that anymore. And that's the way we work. And then we have follow-ons. We have Health is one of our top companies. I think every single man should invest in that. Is a diagnostic tool for excellence now. They work very, very hard. And
Repeat the name.
Avenda Health. And they do prostate cancer. We have 7 companies in our portfolio that we want to connect with family offices that have hospitals, and all over the world, because those are very interesting diagnostic tools that can be plugged in very easily. Avenda Health is one of them. Rejuvenate Ventures, that's telomeres they start selling to dogs, and they work with heart tissue. We have Wavy Diagnostic, is a paper that allows parents of toddlers to see if there's liquid in the ear canal. I had my son when he was a kid. He had an earache. I had to take him to the hospital. I didn't have anybody to take my daughter, so we spent 6 hours. We did all the. I have the whole multiplier impact. 80 million night visits in the U.S. There's 80 million night visits for toddlers that have an earache.
Yeah, and with my kids too, they had earaches. They would recommend putting tubes in the drain, all that business, right? But what you're saying is you waste so much time doing so because the only methodology was to go to the doctor and then go to the hospital, and then you spent 2 days all in, and arguably that could have been done more efficiently.
Well, this is a piece of paper. And the piece of paper costs cents. You can buy them. It's called Wavy Diagnostic. You can buy them on Amazon and you can use it. And it's 98% efficacy versus 93%. The hospital also has a trained nurse. You don't want to have a toddler running around screaming with pain because they do know how to say that they are in pain. In an emergency room, when people are. So we evaluated the whole map. The hospitals pays like $3,000. The patients between 600 and 2,700. 6 hours of pain. Everybody's upset at the emergency room. The nurses have to be trained. It costs $10 per quarter to train that nurse. The parents go home. I was a single mom. I was alone. I was doing my MBA, and we were in Boston. And the whole thing was, and it was nothing. But most of the ear pains in toddlers 2 to 5 years occurs at night because you put in pressure for its growth. But my father-in-law was an ENT doctor. And if you have meningitis, that's deadly or it can cause permanent brain damage. So as a parent, you have to, and then I think what happens to the poor people that have to take 2 jobs and they have to take the kids and then they have to go back home and then they have to go and work. So it's one of these things that everybody benefits from.
Exponentially, the benefit it's exponential. Yeah.
It's a multiplier impact. So we have that. We're looking at Link. Link has an insiders round, which is at a meeting this morning. I cannot talk about the details, but we are able to go into Link. Yeah, you can do Link Grow. And they have announced some very interesting advances. And they have an insiders round. The only way to get in is that you got in before. So the way we work as a group, which I think is the power of the tribe, is that few people would take the risk of putting a little bit of money in the company. We get in the company. We help the company. As the company continues to grow, the value of the company continues to grow, but we can put in more money. So some people benefit later because somebody invested before. And what has happened, I didn't structure it that way, but what has happened, we have the power of a community supporting this for the benefit of everybody, not only us, because we invest, but other people also invest. Eventually, what I would like to do is I would like to do a whole investment club where we could truly support the companies and maybe also have the option of getting the return, not because we sell that, but because we maintain that. Only family offices can do that. A corporation cannot do that. Only family offices can do that. And it
That's
applies
true.
to everything. It applies to climate, to water. Water is a big thing. We should be investing more in water. So it applies to everything. But anyway, very passionate about that. Very, very active learner as well.
So what is there a carry for the club on the upside? Yeah.
Yes. Yes. So, from a tax perspective, the membership is an expense for people. So people can write it down as an expense as an
Immediate deduction. Yeah.
Yeah, it's immediate. And then the carry, we charge a carry every year and then we return. We charge 2% every year. We return that. And then we take 20% of carry.
Yeah.
And
Yeah. Pretty normal.
yeah, when we compare that, I'm an engineer by trade. So when we compare the flow of capital, the cash flow. What happens is, if you're an investor in a VC, like I am too, and I like emerging fund managers. I don't like the big ones. They don't care about me. But the emerging funds, there's some super cool one, and I'm in 2 of them. Actually, the club investing in one. But when you invest in a fund, the fund charges 2% of the capital committed, whether you invest or not, and they do that for 10 years. So off the bat, you already spend 20% of your capital supporting the infrastructure. And then on top of that, you pay 20%. if you know SPVs, which a lot of people are doing SPVs, the key question on any SPV that people need to ask is how much of my money is going to the company? Because this is what happens with it. We have 6 SPVs. We don't do SPVs anymore. But this is what happens. You structure the SPV, you have to pay the management of the SPV, which is 5 to 18,000, it depends.
Yeah, depending on what you
So
use.
that is the cost. That's the platform, Angel Lease, Sidecar, whatever. You also have to change the management, pay the management of that. So here are the two things that we solve for. Although our intention, I'll tell you about our intention before. We didn't start because we wanted to do that. I just wanted people to have access to better deals so they could be better angels. That's what I want to do. So in their communities, they could be better angels. But it has shifted, of course. If you're a fund, if you invest in a fund, what happens is we did and I have an Excel sheet. What happens is if you put $5 million in a fund, on average, you would put 400,000 in a company. Because the rest goes to, and you would put 20%, and you put 4 million into a company. That's it. The other million goes to pay that. If you put the same amount of money through a club, our club, if somebody else has the idea of doing a club, that would be fantastic. You only put the money, the 2% on the company you're investing.
Right.
If you add that to the $25,000, the amount of money that you can put in the same 10 companies is 443,000. The more money goes to the company. Now, it is true that more money is going to get lost if the company goes bad. But in the bad case scenario, limited partner makes 43% more money in the similar scenarios with a club versus a fund.
No, that's super easy math. More money you might lose more money, but you'll also make more on a winner.
Yes. And if you put it on the top percent, so we did the calculation, on the top percent, you make 20% more. So you lose less in the worst case scenario. That is a VC. There's two other advantages, which is you can influence the outcome. And you cannot do that at a VC. I know. You cannot do that. And there's some limitation at a VC. And it's the GPs, I don't think the GPs are doing it because they're bad. That's just the structure that we have.
That's just the model. Yeah. Yeah, that's true.
Now, if you go through an SPV, this is what happens. If you go through an SPV, the money that gets invested is between 60 and 70%. So let's say that I put 100,000. I'm going to put a million, but let's say I put 100,000. And let's say the company does well. And 100,000 gets multiplied by 5. So if I put 100,000, it gets multiplied by 5, then I make 500,000.
But if it's 70,000 by 5, it's less, right?
Exactly. And VC has become a fee structure industry. And then people there's no real incentive because you don't need to have an exit to make money on VC. And that is a problem that I have with VCs now. And that's what I want to change.
So I'm a New Yorker. And so I grew up surrounded by hedge fund guys and girls, mostly guys. And privately, they would all say, hedge funds aren't a business model. It's a compensation scheme. Same thing,
It is.
right?
It is.
Yeah. Because
so I'm still,
the only hedge fund that I know of, and there's probably more, that went public was Man in the UK. And so it monetized its future value by going to the public markets. But for the most part, a hedge fund manager in New York is just printing money every year. And then when he closes up shop, he doesn't sell the hedge fund. He gives the money back and he goes and forms a family office with all the money that he made. And you don't need to put a multiple on something that you just give the money back, right? Because you were printing money all the way along. And again, I'm not passing judgment, but it really is. Now, if you're Stevie Cohen and you're doing 43% and you're getting, 3 and 60, the economics, you make a lot of money, right? And you make a lot of money for your investors. So was it worth it? I don't know. Right. It was definitely
Well,
worth it for Steve.
I have a PhD in finance. I was studying. Yeah, yeah. And yeah, I think people have the best intentions, but we need to align the incentives because otherwise it's too easy to get sidetracked. And it's too easy to go and have, you have to show that you have to spend money on a good, so you have to do the hair, which I don't. And but there's so much pressure I call it the Hollywood walls. There's so much pressure to impress by looking and by having it, convenience. If we look at no fund returns, the capital, it's in paper. I wrote an article about it. It's on paper. And I
The
was,
stats are there. Yeah, the stats are there. Yeah.
yeah. And
So
so,
what's this is
yeah.
fascinating. I know we a little got off the track, but it doesn't matter. It's our track. We can do whatever we want. Tell us what's in it for you. Not, what's in the future for you short term? What are you excited about? Aside from the companies that I mentioned, I'm super appreciate you mentioning them on the record here.
Oh, look at our website, wealthy.club. Look at all the companies that are there. There's some that have exited and they have been merged with another ones. If there's a company that you can help, let us know. We'll put you in touch. We're in this together. We need
Yeah.
to create wealth for everybody together. What excites me is, well, what excites me is I feel that I was able to combine socialism and capitalism. There's a lot of ignorance about that. Socialism is about being kind and being compassionate to those who don't have the same opportunities that we do, and to live society as a whole. It's not communism. Communism is something else. People mix it here. Because I lived in good and bad socialism. I've not lived in a communist. I lived in 9 countries. I have not lived in a communist country. I have visited, but I have lived in good socialist countries and bad socialist countries. So on the name of socialism, you're very, very unproductive. And that's where capital comes in. So capital is about numbers and processes and progress that we can measure. Socialism is about kindness and emotion that we cannot measure. And I think both are the same coin. We need both. But because they're looking towards the outside, they cannot see each other. I am very passionate about finding ways that we can work together. We're so polarized. AI only helps you support your theories. AI is not meant for us to look at a different angle. It's not. Even if we tell them, tell me another way to do that, we have to prompt it. And I think AI is causing a lot of division. And I'm very sad about that. I think we need to, as society, we need to lift progress for everybody, not just us. My heart breaks. I'm from Venezuela. I have a nonprofit that sends food and medicine. My heart breaks when I see the people that were born there. They were absolutely amazing people, adorable people, and they have no way of progressing. But the same thing happens in Iran now. The same thing has happened in Syria. The same thing happens in North Korea, Afghanistan. So I feel what I'm doing is helping a lot of founders have a better, nicer way and investors. And I think the next step for me is figure out how we can expand that. So as the world progresses, we can be better as a world.
So
And I
I'm a
have
hardcore. Yeah. Say that again.
and I have no clue how to do it.
So I'm a hardcore capitalist, and we're all a product of our environment and our experiences.
Well,
I'd like to know, if you don't mind sharing, where you lived that was a good socialist experience.
Denmark and Sweden.
Ah,
And I go to Sweden. I'm Australian too. I lived many years in Australia. It's the Sweden is a good example. And it's the consideration that we have, and it has some challenges. I mean, it's not foolproof, but it's a consideration that if somebody needs the support, society would give the support. So what happens in a lot of developing countries is the government doesn't support the people because the people support themselves. But you have a tribe. And because you have a tribe, you have less mental health issues. because you are really,
No
really,
doubt.
really, really important.
Yeah. And look what happened. I don't know if you watched any on the Blue Zone where the people lived the longest. It was not just that they had good food, they had community, right? And it happened to be in Greece. I'm Greek. I was born
Oh,
here, but my parents were born here. I was born here. So I still have an appreciation for my heritage. I was just in Greece and Italy. It's just a magnificent, wonderful culture. But arguably one of the reasons why people lived so long in these blue zones was not just that they had indigenous food that was pure and didn't have any of the junk in it, but they also had this sense of community that everybody was helping everybody. Somebody needed something, it just
yeah,
happened, right? So I
yeah,
think
yeah.
there's a lot to be said for the energy of that, right?
But the thing is that if we do too much of that, then we don't progress because people get lazy.
They
So,
get
so
lazy. Yeah,
I
totally.
don't know. I don't know what the answer is. So I just don't know what the answer is. I'm just very fortunate to have been able to live in both at the right time. I worked very hard, very, very hard in Venezuela, and I lost all my money in Venezuela before Chavez. The reason Chavez got elected is that 60% of the money in the bank, 60% disappeared. And that was because people stole it. So that's why people move to somebody that I'm going to protect you. They need to be protected because there's no way they protect themselves. So they got into another problem. But, um, but that we need to understand that impact. You know, you can cut it if you want to, but I fell in love with the values of America. You work hard.
Totally.
You're the most generous society that I've ever lived is the Americans. And I lived in America many times because I come in and I go, I did not want to raise my kids here. That's really interesting. Too much pressure on external locus of control, too little pressure about what's important for you. I remember I used to walk with my kids to the football games. I used to hug them and somebody says, oh, that might be what is it? Physical abuse or something like that. I said, it's hugging. What are you talking about? So I did, and I was very scared of drugs. I didn't grow up with drugs. We didn't have drugs where I grew up. We just didn't. It was not there. So I never took drugs, but it's not because I'm super special. It's just they were not there. Probably would, I don't know. But the essence of the Americans would do whatever it took to help somebody else. Now, what happened? They started feeling that they were taken advantage, and the other people felt that they had the obligation. Now we have a crash of values. I go to Berlin a lot, and people in Berlin keep asking me, what happened? Nobody knows. Nobody knows. I don't care. I don't know. It's too hard, too complicated. But the fact that this is a place, I live here because my intellectual property is respected. And it's not my investment. You have a person that wrote a little thing and someone wants to copy, they give the credit. That doesn't happen anywhere else. That only happens in America. That respect for intellectual property is
It's
another by
true.
the board.
It's true. I think that's absolutely true. In fact, one of the reasons why, on some level, we've been able to prosper as we have in a short 250 years, can you imagine it's just a blip, right? Is because we have rule of law that ain't perfect, but works pretty good, right? And I was just watching an episode of Lex Friedman where Paul Rosalie had visited an uncontacted tribe in the Amazon. And it was really an interesting discussion because they're completely in the wilderness and been living their life for maybe thousands and thousands of years. And they have no idea what's going on in the rest of the world. And all they care about is to be left alone and make sure they have enough to eat. So it's back to fight or flight, food. You get up in the morning, all you have to think about is what I'm going to eat, and that some is not going to eat me, right?
No, no, no.
Plague, right? That's right, you play. That's right, yeah. It's a fascinating episode. I don't know if you followed Paul Rosalie, but he's secured 20,000 1,000 acres of the Amazon now and is on a mission to do almost 300,000. So fascinating experience that he talks about.
I'll take a look at that. But an anecdote for you. When I was in college, I had saved a lot of money because I knew early on that money gave me choices. So I worked very
Freedom,
hard.
freedom.
Yeah,
Yeah.
yeah. And so I left my parents' home, but I always saved money. And then I got to a point where I could buy a car. Somebody told me there's this land in the Amazon, and I went and I saw it and I bought it. And in the Amazon, the Yanomamis, they don't have a concept of property. So I remember talking to them. I had a watch, it's just a watch. I remember talking to them, and somebody asked me for a watch. So I gave them the watch. And then I need to go because I was going on a bus and the bus was leaving. And I was trying to get the watch back. And I said, it's mine. And then there was a priest that was walking around there. He was giving food or something. And he said, they don't have a concept of property. And their Spanish wasn't that good. And I said, how do you do this? Just tell them that you need to see the hour. And they gave it to me. So ownership was defined by need to use. Then what are the social implications of that? Now, I did many years in Australia, and the Aboriginals don't have the notion of life, your spirit. And there's a great book called Sand Talks about talking about Aboriginals. But because we move, like you move, I move, because we move, we lost that connection with our roots. But Sand Talk, it's a very interesting book that talks about how natives see themselves embedded into the earth. And it's so fascinating.
That's really interesting. So back to this just for 1 second. The the way that Paul Rosalie has been able to buy this land up is one, the people who had come in and figured out how to buy it from the indigenous people, because there still is issue with title, right? But they bought it with the intention of logging it. So they did the heavy lifting, the loggers, of finding a way to buy it, and he would rush in and buy it from them and say, okay, now you're going to make more money with me. You're going to become part of our organization, and we're going to keep this land open. And so he would go in and come, because the indigenous people were the people who were going to do the logging, because that's how they were going to make money. Because in their
Yeah.
view, they might own this 10,000 acres, but it was of no value to them, right? They didn't understand. But all of a sudden, the loggers came in and said, okay, you can make money, but you have to log it. And he came in right behind him and said, don't log it. I want to make you more money, and you're going to become a ranger to find me more property. And you can talk to other indigenous tribes. And so he's really done an amazing job of leveraging a very difficult situation. So anyway,
You're still a New Yorker.
I'm sorry. What?
The New York just goes through.
I'm about to buy a big piece of property out here in Utah and keep it as open space, so nobody can do anything with it. So
I
I'm
love it.
on that
I love
on that bandwagon.
I'm interested. I don't, because I think that's what we need. I think that's what we need. And I think no matter which tendency to go, you end up realizing you need both. It's
So
stupid fighting. We need both.
some people, I'm a New Yorker, right? And some people outside of New York, when they come and visit, they misinterpret the energy of New Yorkers, because they would stop, a German family would stop a New Yorker on the street, and the German family is walking four stride, and they don't understand you can't do that in New York because people are going to pass you, right? They'd stop and ask somebody for directions, and they would, hi, how are you? What's going on? And New York would say, where do you need to go? I'll get you there. And they would immediately say, go here, here, and here, boom, boom. And then they would keep on moving. Well, that was in New Yorkers, they're the most generous people around, right? They just don't want to screw around wasting time. I don't need all the niceties. Just tell me what you need and I'll give it to you, right? It's kind of
Yeah,
the
right.
same contrast about when you do business in Silicon Valley, everybody wants to help everybody. Okay. I mean, no, I mean, generally speaking, right? They're open to helping. When you sit down into a meeting in New York City, there's none of this, "Oh, how was your weekend? How is it?" No, it's like, "What do you want? Okay, I'll give it to you. What do you want? No way, no how. Let's move on," right? It's a completely different environment, right?
Yeah, yeah, yeah. But I was in love with that because I said, it's so efficient.
It's very efficient.
It's very efficient. So capitalism is about efficiency and production. We need that. Otherwise, we can't function. Yeah, yeah, yeah. No, I think I need to be more British. Yeah, you just and your accent came out a little bit. I
Yeah,
haven't been a lot in Utah, but every year I go and spend a week in New York. I love the energy. Yeah, and I go
it's
everywhere. I go to Australia. I go to Suriname. Yeah.
it's a wonderful
How can I
place.
help? How can I make your life better?
It's a very, very generous question, and you just did. So you don't have
Thank
to
you.
do anything more. And I didn't know what to expect, to tell you the truth, and the audience can hear that out loud, but I'm super happy we've done this. It was been enriching for me, and I'm sure for the audience as well. So, Alicia,
Yeah.
thank you for doing. Yeah, I
Thank,
really
thank
appreciate
you for entertaining, for the fun. Life is too short to have a hard time, and let's do more peace and love, and let's say
it. It took me a while, but it's all about loving kindness. I figured it out.
it does. It does. It took me too. Yeah.
Yeah,
I, it took me until the 60s to realize the secret sauce is kindness and love.
yeah,
Yeah.
for sure.
That is the
Alicia,
mantra.
thank you. Normally, I would stop and talk to you after, but I've got to run, but we'll
Okay.
talk again offline if that's okay.
Yeah.
Okay. All right. Thank you,
Okay.
everybody, for joining us today.
Goodbye.
Thank you, Alicia. Bye.